Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Alimentation Couche-Tard stock so we can determine if it's a buy or a sell. Alimentation Couche-Tard operates over 14,000 convenience stores across Canada, the US, Mexico, Ireland, Norway, Sweden, Denmark, Estonia, Latvia, Lithuania, Poland, Russia, Japan, China, and Indonesia. They operate corporate stores mainly under the Couche-Tard, Circle K, and On The Run brands. But they also have affiliated brands, Max Convenience Stores, Go, Dairy Mark, Becker's and Winks, and a bunch of others. The company is headquartered in Laval, Quebec, Canada, and was founded in 1980. Let's get started with the model. This is a large cap company, 67 billion market cap. They're trading at $68 a share, and they have 985 million shares outstanding. We're going to look at the ticker that trades on the TSX, so all the numbers in this video are in Canadian dollars. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video, and free cash flow is cash flow from operations minus capital expenditures. They have nice free cash flow growth from 2.3 billion up to over 4 billion Canadian dollars. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that's pretty steady. It does go up a little bit from 2.4 billion to 2.9 billion. Revenue is the sales for the company, and they had the highest ever in the trailing 12 months, over 70 billion Canadian dollars. Let's look at the capital structure. 12 billion of equity, 9 billion of debt. They're 57% equity, 43% debt. Their net debt is 8.1 billion. And their WACC is 9.5%. That's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's 72 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $65 billion. We divide that by 985 million shares. And we get a calculated stock price of $66. They're trading at $68, so they're trading at a 2% premium. It's a sell according to the model. I remember doing a video back in January 21 on this company, over 2 years ago. And if you watch my channel, I said this is my favorite Canadian stock. I really like this company a lot. They were trading at $38 a share, and my value was $73. And I was pretty confident with this number. I actually told a lot of Canadian people, you should buy the stock. And look where it is now, 68, right where my target was. Too bad they're not trading in the US, because I would have gobbled up this stock. Simply Wall Street values the company at 85. They're saying it's 20% undervalued. 16 analysts price this stock, and the average price target is 72. They're saying it's 7% undervalued. This is where the stock has been trading since 2002. So you can see it's pretty much only gone up. There was a pretty big dip during COVID, but it came right back up well past its all-time highs. This is a great company, a great stock to own. Plus they pay a dividend on top of the stock price appreciation. What more can you ask for? They raise their dividend each quarter. It was 5 cents in 2018. It's up to 14 cents. It's only a yield of 0.8%, which of course they can easily afford. Only 13% of their free cash flow, 19% of their net income. There are 13 companies in the same industry as Couche-Tard, and Couche-Tard is the largest. They're larger than Kroger, Albertsons. When I convert all the market caps to Canadian dollars, they're 67 billion. The second is 47 billion. They pay a dividend lower than average. Their price to book, PE, and price to sales are worse than average. Their price to free cash flow is better than average, equal to the median. So to summarize, I have them trading at a 2% premium. I rank their free cash flows and revenue 9 out of 10. Their ratio is 4 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.